Live from New York City for our audience worldwide, I'm very pleased to say on TV, on radio, we're joined now by US Secretary of Labour, Marty Walsh, to get the White House response to these tremendous jobs numbers that we've seen so far this morning. Mr. Secretary, great to have you with us this morning. Let's get straight to it. Demand's been stellar for a while now. We've been waiting for the supply to turn up. Are you confident we're seeing signs of that with this jobs report this morning?
We certainly are. I mean, I think adding 4 million jobs since the inauguration of President Biden, an average of 800,000 plus jobs over the last 3 months. We're seeing our economy moving forward. We're seeing people going back into all sectors. It's not just leisure and hospitality, although that was our biggest gain again this month. But we saw people in education and government education and also in manufacturing. So we're starting to see different sectors getting busy as well.
Mr. Secretary, what do you think is driving those supply constraints starting to ease just a little bit? What do you think is driving that? Some people have pointed towards the expired unemployment benefits in some states, half the states across this country. What do you think it is?
I think as more people vaccinated, more people feeling comfortable now, we obviously have to keep an eye on the Delta variant and where that takes us, but I think people are feeling safer going out. When you go to a restaurant, more and more people are coming out. Here in Washington, I see more and more people doing on those tour buses. So people are starting to travel. We're seeing more travel in airports, so it's comfort. It's people feeling safe. 70% of the American population has at least one vaccination shot, but we have to be very cognizant of the Delta variant and make sure we don't let that spike and get out of control.
A higher wage is making it happen. Do we need a higher price to bring that supply back in line with demand? 4% wage growth. Mr. Secretary, do you think we do? We need to see more of this?
Well, I think a higher wage growth is good. It's good for the American worker. It's good for people going back to work. I think in some sectors we definitely going to need to see higher wage growth for people to come back to work. But I think where we're headed right now, I mean, all signs are incrementally going in a good, positive direction.
Companies are starting to respond on the vaccine front. Tyson Foods requiring all staff to be vaccinated by November 1st. We heard the same from United Airlines. From your standpoint, is this something you and the administration support? Companies mandating vaccines for their labor force?
Certainly, the president said he supports companies when they put those mandates in place. We're taking a different approach to the federal government. We're asking people to get vaccinated, and if they don't get vaccinated, we're going to do lots of testing. So anything that we can do to encourage people to get back into the workforce is important. I think there are people that don't want to get vaccinated because of whatever reason it might be. Some people have good, legitimate reasons, but the majority of people that aren't getting vaccinated, it's a political thing, and it shouldn't be a political issue.
If it is a political thing, sir, why do you think minority groups in some cities like Washington, D.C., the city you're in, like New York City, why some of those minority groups have not been getting vaccinated, why those vaccination rates are so much lower? Is it just politics, or is something else happening?
No, I think in the communities of color, particularly in urban areas, it's a distrust in the healthcare system over generations. I seen it when I was mayor of Boston, and we had to do a lot of work to go out there and build trust in the community. People of color, particularly the African-American community, felt in some cases abandoned by the hospital systems over years. So we have to do more work there to encourage people to get vaccinated. And
that's the issue at play right now. So, Mr. Secretary, I wonder what your thoughts on the following might be. If we're in a position now where large companies are starting to say, if you're not vaccinated, you can't work for us, where cities like New York are starting to say, if you're not vaccinated, you can't dine here, when you and I both know the vaccination rates of minority groups just aren't high enough, are you worried that they might be frozen out of this economy?
You know, I'm concerned, but it's also outreach and marketing. We have to go out into the communities and talk to people to make sure people are comfortable with the vaccine. So you can't just arbitrarily say in certain communities in America, like for example in Boston, the communities of color, that force people to get vaccinated. We have to go out and do an educational component of why it's important to get vaccinated, just like we had to do an educational component at the very beginning of the pandemic to express why it was important to wear masks, physical distance, wash your hands, and do all of those things.
So what are you doing right now to make that happen? What does the outreach look like?
Well, I mean, I think a lot of it's going to be up to local governments. I think that we're going to be working with mayors in states around the country about that to reach out there. And I know that the COVID task force at the White House is working on it as well right now. I haven't had a meeting with them in the last couple of weeks, but I know that they're working on how do we deal with this issue of the people in America that have decided not to get vaccinated for whatever reason they are. How can we encourage them to get vaccinated? So it's still a work in progress.
Do you think we need to get past this lazy media narrative that it's just politics, that there's much more going on?
Say that one more time, I missed that.
Do you think we need to move past the lazy media narrative that this is just politics, that there's more going on in this country? You touched on the distrust of government. That's a lot more pervasive than I think some people are willing to acknowledge, Mr. Secretary. Would you agree?
Yeah, there's no question about it, and I'm not acknowledging it because I saw it firsthand as the mayor of the city of Boston. But I do think there's a lot. I think a lot of this also has to do with politics. I think that when you look at some parts of rural America, you look at some parts of what's happening down in Florida, people refusing to get vaccinated. It's not a political issue. Getting vaccinated is not a Democrat or Republican issue. It's not a progressive or conservative issue. It's about taking care of yourself and your family and your livelihood and keeping yourself alive. So I wish it wasn't political. It shouldn't be political. Wearing masks shouldn't be political. It has nothing to do with politics. It's about your public health. It's about keeping yourself safe. And ultimately, it's about keeping our economy moving forward and keeping our country moving.
Mr. Secretary, I know you've got to keep moving. You've got a busy morning this morning. Thank you for being with us. We appreciate it. The US Secretary of Labour there, Marty Walsh. From New York City, for our audience worldwide on radio, on TV, this is Bloomberg.
Friday the 6th of August, what are we, 7 minutes past the hour. I'm Guy Johnson in London. Taylor Riggs is over in New York. Alix Steel is out today. What a day to be out, Taylor. A blowout payroll report, really having a massive impact on people's thinkings in terms of where the US economy is. Those numbers absolutely huge across the board. Is the Fed out of excuses? I think that's a big question for today.
It is indeed. Why don't we ask Mike McKee, who might know the answer more to that, of course. Guy, let's bring in our Bloomberg International Economics and Policy correspondent. And Mike, I mean, again, yeah, does this change the game for the Fed?
Well, that's the question a lot of people are going to be asking. I don't think so yet because it's 1 month's data, but it sure was, as Guy says, good data. Now, you look at where we are in terms of total jobs restored from the losses of the pandemic, and we were down about 8 to 10 million. Now, after almost 2 million jobs created, including revisions to May and June, we're looking at about 5.7 million. So we're getting there. Does the rate of change, is it moving fast enough for the Fed to fit their substantial further progress narrative? The other question is the diversity issue that they're looking at. Does the Fed see enough progress in the unemployment rates for blacks and Hispanics? Black unemployment fell almost, fell a full percentage point. Hispanic unemployment fell almost a full percentage point. And then what do we do about the wages numbers? They go up, even though most of the jobs created were low-paying service industry jobs. So is there a pay rise increase that the Fed is falling behind? The Fed probably thinks not yet, but we'll keep an eye on it. Puts the pressure on Jay Powell for the Jackson Hole Conference. And of course, the August payroll report comes in September 3rd. The Fed next meets September 22nd.
And the yields market certainly starting to take a look at what that meeting looks like. Thank you, as always, there to our own Bloomberg's Mike McKee. And Guy, we really want to get some more insight into this jobs data. Let's do it all with Heidi Shierholz, Economic Policy Institute senior economist and former chief economist at the Department of Labor under the Obama administration. Great to have you. Talk to us really about what stood out to you in this report.
The headline, the huge job growth, was just unexpected, not unexpected, but it surpassed expectations. So that was really great news. The revisions to earlier data was also really important. One of the things that I thought was crucial in this data was the big increase we saw in leisure and hospitality jobs. Leisure and hospitality, which that's where restaurants are, grew by 380,000 jobs in July. Over the last 4 months, leisure and hospitality has added 1.4 million jobs. And that is nearly half of the 2.8 million jobs we added over that period. So one thing that I think that hopefully this report will do, will really put to rest some of the concerns about having a big damaging labor shortages. Even though wages are rising in leisure and hospitality, it's accompanied by really strong wage growth. So what we're seeing is the kind of economy we want: wages growing, jobs growing. There's still a long way to go, but we're definitely on a really good track right now.
Heidi, talking of that good track, good morning, it's Guy in London. The reference week was before Delta really started to make its presence felt. Do you think the next round of data that we're going to get maybe reflects that Delta impact and maybe we get a more negative print?
That is a good question. So it is true that the data that we got today reflects mid-July, and a lot has changed in the couple of weeks since then. So I do think that the Delta variant, the increase in COVID cases may slow things down somewhat, but I'm not actually worried that it's going to really put the brakes on. I think what would really put the brakes on would be a vaccine-resistant strain of the virus. But given that the vaccines are effective against the Delta variant, I think we won't have as many people pulling back their economic activity. People who are vaccinated will still be getting out there. So I anticipate some slowing. There'll be some hiccups in supply chains from around the world that will slow things down somewhat, but not a major disaster here.
Heidi, there's a difference between what the economic models are telling us about inflation and what real people on the ground are feeling and hearing about inflation. You even have Joe Manchin of West Virginia writing and saying, can we please start to talk about tapering back some of the QE, because all of their constituents are saying that inflation is really starting to hit hard. Do we need to focus more on inflation rather than unemployment at this moment?
There is such an interesting difference between the inflation, what it means for people's living standards and what people are actually paying, and then what it means for policy. So there's two different measures of inflation that we need to look at. So the increased gas prices, increased food prices, those all really hit people. They reduce people's real wages. So that really matters to people's living standards. But it doesn't really matter to policymakers' decisions. So things like energy, food, those prices are really set in global markets. So our policymakers in the U.S., we don't want to respond to pull back anything that's going on here to try to fight inflation that we won't have any control over. So there really is in the inflation that the sort of policy relevant numbers, what we have some control over, those are looking pretty tame right now. So we have to keep our eye on the ball, keep looking out for it. But at this point, it's no time to make policy changes. At this point, holding the line is the right choice, given what the data are showing.
But Heidi, are we starting to see second round effects? Wages are picking up, and that is a good thing, to be honest. We've waited a long time for wage growth to start to actually happen. We were worried that actually the Phillips curve was never going to pick up. But now maybe there's some evidence as a result of the pandemic that we are starting to see it come back to life. But are we getting second round effects? And is this the kind of the crucial moment? Is this the moment at which policymakers really need to figure out exactly how they nuance the policy reaction and make sure that everybody gets taken along, and people are worried about what's happening in the minority communities in terms of what we're seeing there in terms of wages and labor participation? But how do policymakers finesse this to make sure that everybody continues, but we don't get runaway wage inflation?
These are really good questions. So I think we are seeing some accelerating wage growth only in very isolated sectors. So if you look at wage growth by sector, which you actually have to do right now because there's all sorts of weird pandemic composition effects. So if you look at the aggregate numbers, it really tells a strange story. But if you look by industry, you see in the vast majority of industries that wages are growing at a pace that right now they look roughly what they would look like if you just extrapolate it out from pre-COVID trends. Nothing looks weird except in one key industry, and that is leisure and hospitality. In leisure and hospitality, where restaurants are, you really do see a big acceleration of wages. But again, that doesn't appear to be hurting jobs growth. We're seeing really strong job growth in leisure and hospitality, and that wage growth is not going, the wage growth in leisure and hospitality is not going to lead to larger wage pressure. It's not going to have spillover effects because the leisure and hospitality industry, even with the recent acceleration, has by far the lowest wages of any major sector. So just to put some numbers on it, they're sort of striking. The average wages for typical workers in leisure and hospitality, the weekly wages, translates into annual earnings of less than $22,000 a year, even with the recent acceleration. So we're not talking about a sector that when you see wage growth is going to really lead to widespread wage pressure. So I'm not so worried about that at this point. I think, the wage growth that we're seeing is very, very good news for workers.
How then does $1 trillion to $4 trillion, whatever, change the game then? A fiscal stimulus I'm talking about.
Right. So one of the things, the bills that are being talked about now, I don't think of them as stimulus at all. I think of them as the kinds of investments that we need to have the kind of economy that we want. The stimulus was really the earlier bills, the ARP that came out earlier this year to really fill in output gaps. That's doing its job. We are right now seeing job growth that, if it continues, even if it slows a bit, will lead to a recovery from this recession that is 5 times faster than the recovery from the Great Recession. And a huge chunk of that is due to what we've already done to stimulate the economy. The upcoming bills, they're more about getting the physical infrastructure we need, the care infrastructure we need, investments in health and education, just really setting us up to have the kind of economy that the kind of society that we want.
Heidi, this is the argument that Mohamed El-Erian is making, that basically we should continue to push very strongly on the fiscal fronts, because as you say, those are going to have meaningful impact. That money is going to have a meaningful impact in terms of the long-term trajectory of the economy and the health of those people that live within it. But on the other hand, the Fed needs to start thinking about changing policy, that we have a very hot economy. We're getting down towards full employment. We are tracking there maybe faster than we thought we were. And as a result of which, the Fed's out of excuses. The Fed needs to get on with it.
So we are seeing very strong growth, but there's still a massive gap in our labor market. Like we're down still 5.7 million jobs from where we were before the recession hit, 5.7 million. And now it's been, 17 months? Over that period, we should have added a few million jobs. So the real gap in the labor market is on the order of 8 million. The unemployment rate right now is down to 5.4%. But we know that it's true that in the aftermath of any recession, the unemployment rate understates weakness in the labor market, but it is really understating weakness in the labor market right now, more so than in prior recessions. If you counted people who dropped out of the labor force due to the coronavirus and so aren't counted as unemployed because they aren't actively seeking work, the unemployment rate right now would be 8.1% instead of 5.4%. So it's a big impact right now. So we are still a long way before we really want to say, okay, it's time to pull things back.
Heidi, we're going to leave it there. Really appreciate your input and your analysis as to what we're seeing in terms of the data. Dr. Shearhouse of the Economic Policy Institute, thank you very much indeed. Taylor, what's going on in these markets?
Guy, I was so excited at the top of the show to get to Mike and Heidi's analysis. I totally blew through our market checks. So let's go back and really look at the market dynamics of what is going on. Really interesting is the S&P trying to hold on to some of those record highs. You're getting the big outperformance in transportation, some of these small cap domestically focused stocks on that better than expected jobs report. Of course, with yields higher, a lot of the tech sector is under pressures. We're thinking about what is the tapering? When does the tapering start? What does it look like? So, of course, stocks that are so heavy on a discounted cash flow to some of those higher yields, really sensitive. NASDAQ 100 under pressure today. Of course, you are seeing yields really climb up. 6 basis points on the day to a 129 guy. This number was at 112 2 days ago. The rate of change on nominal 10-year yields has been incredible, particularly when you were at a negative record low 120 on the real yield. You're now up to just a 1.06 negative real yield. You're really seeing a lift in some of our pulled forward expectations across the board. We are going to be doing markets and jobs much more next. This is Bloomberg.
It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. I'm Ritika Gupta. United Airlines says workers must get vaccinated against the coronavirus. It's the first major U.S. carrier to impose the mandate. United says employees must upload their injection record to a company database no later than October the 25th. Fortress Investment Group has sweetened its bid for British grocery chain Morrisons. It's now offering $9.3 billion. Morrisons' board has reiterated its unanimous support for the Fortress offer, which made binding promises on pay and pensions. Rival bidder Clayton, Dubilier and Rice has until Monday to increase its offer. And China reportedly will fine food delivery giant Meituan $1 billion for abusing its market position. According to the Wall Street Journal, Meituan will be required to revamp its operations and end its exclusive arrangement with merchants. It's the latest in a series of crackdowns on China's tech industry. And that is your latest business flash. Guy?
Rebecca, thank you very much indeed. OK, let's talk about what is happening in ETF world. Cathie Wood, always at the centre of the action. Here with what is going on now, Dave Wilson.
Thanks, Guy. I mean, you're talking about a fund with $23.5 billion in assets when you look at her flagship ARK Innovation ETF. And, what's interesting there, I mean, track the year. It's been quite the volatile period, considering the shares set a record in February, fell as much as 39% in the next 3 months, and they've really struggled to come back since then. And, they're lower as we speak, while the S&P 500 has a gain for the year, of 18%. So, she's definitely trailing. And we've seen money come out of this fund in 3 of the past 4 months. July's outflow, something like $700 million, was the biggest yet. So it's like the shares start falling and people, at least to some extent, start running for the exits. And beyond that, we're seeing investors increasingly bet against this fund. And, you look at short interest because you're talking about, publicly traded shares, and, there's the opportunity to sell them short, as there would be for any other stock. And, since mid-May or so, that short interest has been around 20 million shares. It's there now, about 10% of the stock outstanding. And you go back to last year, there was fewer than 1 million. So it goes to show you how things are changing. And you're getting this new short ARK ETF that the firm Tuttle Capital Management filed for a week ago, would basically give you the inverse of this fund's performance through swap contracts, and is planned to charge about 0.75%, same as Cathie Wood's fund as it happens.
Dave Wilson, thank you as always keeping us so smart, particularly when it comes to ETFs on this Friday. And make sure to stay with us because, Guy, this is interesting. That Delta variant really highlighting some of the uncertainty, the impact on travel, the impact of forward guidance. Take a look at shares of Expedia. We're off now about 9% or so, really about some of these renewed concerns about the virus. We're going to have Peter Kern, Expedia CEO, joining us next. They reported yesterday after the bell some big numbers. This is Bloomberg.
As far as the Delta goes, it's difficult to tell what the effect is, except for markets that have closed down.
We know this pandemic will end. We do know that we're going to get back to travel the way it used to be. The thing we don't know is how fast.
Trying to get people to, to encourage them to come back. The Delta variant has changed all that. The new CDC guidelines has changed all that.
We're reinstituting the mandatory mask policy at all of our sites.
We are strongly encouraging. We're providing incentives and then implementing the safety guidelines I talked about with masking and social distancing as well.
We are going to work with governments based on government mandates, local mandates. We're going to follow them.
If we have a lot of people who are working from home part of the week and in the office part of the week, I can see a lot of people saying Thursday, Friday, let's go work somewhere else, mini vacations. That can help build the travel industry.
Some of the CEOs that we've been talking to this week talking about the impact that the Delta variant is having, the uncertainty certainly growing. Expedia Group overnight reporting a bigger than expected loss. The company says the rising COVID-19 cases harmed confidence in the travel industry. At a top line level, Q2, the company beat. Gross bookings well past expectations. Peter Kern is the Expedia Group CEO and Vice Chair. Peter, always great to get your take on what is happening here. You talk about kind of bumps in the road. My question to you is, how big a bump do you think Delta's going to be? What kind of impact do you think it's going to have?
Yeah, thanks for having me, Guy. I think what we're seeing is it's certainly much more muted than historically. This isn't COVID all over again. This isn't the third, fourth wave. But every time there is a news cycle like we're having now, where and reality, where cases are up, where guidance changes, where local governments or federal governments are changing their recommendations or even locking down in places like Australia, that changes things. And I think, again, it's more muted, but we are definitely seeing some uncertainty come into the market from Delta.
How much of that uncertainty, and I know we're only a week into August, are you seeing continue a little bit from July? Are people canceling some of the nearer term reservations, but keeping longer term reservations?
Yeah, I think in general, that's the right way to think about it. We're seeing a little bit of creep up in cancellation rates. It's not alarming in any way. It's fairly modest, and in most regions measured in the 100 basis points kind of difference. But again, it's very localized. It's very specialized. So if you're in Australia and you literally cannot move, you've canceled your trips for the next few weeks. But if you have a Christmas trip planned, you may well, hang on to that on the theory that things will be better. And they should indeed get better. And in many places, they are starting to improve. So I think you're just seeing these short-term gyrations in terms of how people react to uncertainty and in some cases fear. So people that are less risk averse, will engage still in travel and enjoy their trips. And many, and some number on the edges will decide not to, and that's what we're seeing.
To this point, Peter, the UK Transport Secretary speaking yesterday said that vaccines will be part of the travel mix forevermore. Quote. Do you agree with him? And if so, what kind of impact is that going to have on profitability? Because that's just going to increase friction in terms of travel.
Yeah, I think I would come at it the other way. I think COVID is something we're all going to have to learn to live with. And I believe that with the benefit of vaccines and other developments going on in the scientific community, we will learn to live with it. And it will be a risk that we can assess and will be, hopefully very nominal over time. So I think it is something we have to learn to live with. But I don't necessarily think the answer will be vaccines. If you think about it, Guy, we just introduced a program to work with UNICEF to help vaccinate people of the world, but it's going to take years and years to vaccinate the world. And as long as the world is largely unvaccinated, variants will develop, other things will happen. So as vaccines roll out, as we're all safer, as we find other treatments that help mitigate any issues from COVID, we will learn to live with COVID, and it will be here for a long time. Most diseases take decades to wipe out, even with very effective vaccines. So I think we do have to learn to live with it, but we will, and it will become an everyday thing like the flu did, like the risks of getting in a car or whatever, and we will all learn to live with that. I don't think long-term everyone's going to need a vaccine card to move around the world, but we will have to live with the virus longer.
And some of the positive, of course, Mr. Kern, that you mentioned on the press release and then, of course, on the call was strong lodging. How are you thinking about a mix of hotel rooms, traditional room nights versus perhaps some alternative accommodations as well?
Yeah, Taylor, we saw a very big, robust reaction in the sort of worst of COVID. We saw a lot of interest in vacation rentals, and that was very good for our Vrbo brand and other related brands across the globe. What we've seen over the summer is a reversion back to conventional lodging. Now, the vacation rental business is very strong. The summer got booked up very early, but we are seeing people obviously much more comfortable to be in hotels, resorts, all the usual lodging use cases. So I think we'll continue to see that. I don't see Delta having a particularly large impact on it. Again, it will have a modest impact on the edges, I think, as some people get nervous or decide to wait it out. But clearly conventional lodging is coming back in a major way. The future state balance, who knows? Vacation rentals were growing already more rapidly than conventional lodging. That probably continues. But I think we'll be reverting more to the mean of where we used to be in terms of the balance between hotels and vacation rentals.
Peter, it's payroll day. We have to talk about the labor market. The area we saw the biggest wage inflation within the payroll report was in the leisure sector. What are you seeing? What's going to happen? Do you think there's going to be, are you seeing the impact of staff shortages? Just give us your read on what is happening here.
Yeah, well, look, we don't operate the hotels or the planes, or the restaurants, but clearly it's been an issue across the U.S. that getting employees back to get hotels to regular staffing, to get restaurants to regular staffing, those have all been issues, and it shows in the numbers that people have had to spend more to get the employees back in. So. I think that is going on, but I think it's also a testament to the strength of the U.S. economy. I wish the world's economy was as strong as the U.S. economy. And, the tourism business is a global one, and we in the U.S. depend on international travel to the U.S., and likewise, they depend on us. So I think it's different in different countries. We haven't seen the same kind of issues in Europe and in Asia, et cetera. But in the U.S., clearly, there's been a shortage of labor, and with all the stimulus going on and other things, it's been challenging to get employees back into the service industry.
You are not the only CEO to echo those sentiments. Peter Kern, really appreciate your time there. Of course, Expedia CEO on all things travel, Guy, as we think about a jobs market today and, well, that Delta virus as well. Let's stick with some of that jobs day, because coming up, we're going to go back to the jobs growth, of course, exceeding expectations. Mira Pandit, JP Morgan Investment Management Global Market Strategist. She's joining us with her take on the labor market. This is Bloomberg.
This is Bloomberg Markets. I'm Rishka Gupta, and you're looking at a live shot of the principal room. Coming up, Jason Robbins, the DraftKings chairman and CEO. That's at 3 p.m. in New York, 8 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Rishka Gupta. The Senate is heading towards a weekend vote on its $550 billion infrastructure legislation. Senators huddled on and off the floor to discuss final changes to the bill, which is 2,700 pages long. Even if the bill is passed, it faces an uncertain future in the House. Public universities in the U.S. face student lawsuits over coronavirus vaccine mandates, according to the Dow Jones. Lawsuits challenging the vaccination requirements have been filed in Indiana, Connecticut, California, and Massachusetts. Students claim they have a constitutional right to go to college unvaccinated. South African former President Jacob Zuma has been admitted to a hospital. Officials aren't saying exactly why, just that he is under medical observation. Zuma was sentenced in July to 15 months in jail after being convicted of contempt of court for defying an order to testify at a corruption inquiry. His imprisonment triggered protests that morphed into riots and looting, in which at least 354 people died. Zuma is due to appear in court next Wednesday. And the U.S. probably enjoyed a hiring spree in July, according to economists surveyed by Bloomberg. Today's jobs report is likely to show that the U.S. added 858,000 jobs last month. Global news 24 hours a day on air and on a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We are awaiting President Biden's remarks on that jobs report, of course, as Ritika just mentioned. You are seeing some strength in the dollar, Guy. We're seeing Treasury yields, well, certainly rising as we think about a rate of change kind of day. Investors, of course, thinking that the Fed, well, are they moving closer to pulling back some of that stimulus? Joining us now, Mira Pandit, JP Morgan Asset Management Global Market Strategist. So, Mira, what did change for you this morning? What changed for the Fed this morning?
Well, we saw another incredibly strong jobs market report. We saw that 943,000 jobs were added to the economy. The unemployment rate fell down to 5.4%. So it was a really strong report. In particular, we saw a lot of strength in services, and that service sector really shows that this recovery is coming in full force. Now, what might have changed for the Fed is the fact that we are continuing to see this strong data. But at the same time, we ultimately think that the Fed's tapering timeline is likely to start later this year, extend into next year, and extend the path for rate hikes in 2023. So it does just give them a little bit more reassurance that we are moving from progress towards hopefully substantial progress.
Mira, it's Guy in London. What does it mean for investors?
For investors, look, what we've seen in the stock market is that it continues to rise. And in particular, as we see inflation high, but also growth even higher, should continue to be a good sign for more cyclical areas of the market, in particular, where we see value in industrials, energy, financials. So some of those cyclical areas going to continue to see a rebound in earnings this year. And even on the tech side, we're seeing some great results there. So investors should really look towards areas of the market that are producing strong and dependable earnings.
But how much of this cyclical rebound that you talk about is dependent on higher yields? And I hate to say it, is 128 good enough for that?
So what we've seen is that we had a little bit of a jump in yields this morning on the back of stronger jobs. But at the same time, there's a lot of technical factors that are weighing on yields right now. We've seen the Treasury continue to spend down its Treasury general account, which has limited the need for more supply. We're also seeing issues with the debt ceiling. And until that's resolved, that's also going to further limit supply. And at the same time, the Fed is purchasing about $80 billion in treasuries a month. So until some of these factors reverse, we could see yields at these lower levels. But come debt ceiling resolution, probably October or November, and come Fed tapering, which could come as early as December, we should see more upward pressure on yields and start to see a bit of a turnaround there.
Some people are arguing that what we're seeing in the bond market is also a reflection of what we're seeing on the ground with Delta. The move lower in yields started way before Delta kicked in. But nevertheless, do you think Delta could make life more difficult for investors? How should they be reading the latest numbers? Today's payroll number is a rearview mirror. We're dealing with Delta here and now. The next number could be affected by it.
That's right. I mean, essentially what the report showed today was reflective of what conditions were like in mid-July before Delta was a huge concern here in the States. But ultimately, you know, I think that what we're going to see is that we're not likely to see a renewed set of lockdowns. There's very little political will for that. We've seen the population over 65, 80% fully vaccinated. So hopefully that should limit the rise in hospitalizations and fatalities, which really drove the lockdowns last year. So even if we see higher cases, some of that damage should be a lot less than last year. That being said, we could still see the consumer become a little bit more skittish. You're hearing some turn in sentiment on return to the office. You could see consumers pull back a little bit on services, precisely the area where we saw drops so strong this morning. So it's a headwind, but I don't think it's going to derail the recovery entirely.
What does a less negative real yield, as we've come from a negative 120 of 2 days ago to a negative 106 on the 10-year, tell you?
It does forecast it does connote that we are moving a little bit stronger in terms of the macro backdrop. So things are improving. But look, it's still a really challenging fixed income environment for investors in bonds. And ultimately, those real yields are going to remain a challenge. Finding income is going to remain a challenge. So staying on the shorter end of duration is going to be important, especially as we start to see yields pick up probably in the back half of the year.
Got the last few bits of the earnings season still to come, but nevertheless, it's been incredibly positive, Mira, certainly in the United States and here in Europe. Is this as good as it gets?
I think we'll continue to see really strong earnings throughout the rest of the year. Again, we did see a complete collapse in the cyclical areas last year. So again, industrials, financials, energy producing strong results should continue to produce pretty strong results. From a tech perspective, very robust earnings there as well. So that should continue. We do have some headwinds on the horizon for 2022, whether it's wage growth or higher input costs, but 2021 should be a really record year for profits. And surprisingly, we had a much shorter profits recession than we were expecting. And on top of that, we've seen margins return to record levels, which gives us a little bit more cushion for some of those headwinds we're expecting next year.
Mira, we're going to leave it there. Great stuff. Thank you very much indeed for joining us this Friday. Mira Pandit, JP Morgan Asset Management. Greatly appreciated. As you can see, you're looking at a shot of the East Room at the White House. We're awaiting the president. He is going to be speaking on today's incredibly strong jobs report. Obviously, I think he'll probably talk about what is happening over the weekend as well with the infrastructure vote and address a number of other issues as well. We're certainly going to want to hear what he has to say. We will be doing that as soon as the president appears. We will bring you the president live. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Byron Trott doesn't like being called a billionaire's banker. Now it turns out he is a billionaire banker. According to the Bloomberg Billionaires Index, the founder of BDT Capital Partners is worth $3.6 billion. The firm now manages $28 billion, and he's taken 2 companies public this year. Trott has advised some of the world's most successful investors, including Warren Buffett. Bloomberg has learned that China's DD Global may give up control of most of its valuable data. It would be part of an effort to resolve a Chinese regulatory probe into the aftermath of the controversial IPO in the US. The data is key to both the business of the ride-hailing giant and to China's economy. And another sign of just how tight the labor market is, Walmart is offering weekly bonuses to many warehouse employees to forego August vacations. Some workers have been offered as much as $500. The majority of Walmart's 190 U.S. warehouses are offering the bonus to those who stay on the job and in some cases work more hours. United Airlines says workers must get vaccinated against the coronavirus. It's the first major U.S. carrier to impose the mandate. United says employees must upload their injection record to a company database no later than October the 25th. And that is your latest business flash, Guy.
Ritika, thank you very much indeed. Taylor, I think this is going to be a huge issue. You're going to end up with a segregated labour market, those that have been vaccinated, those that haven't been vaccinated. We were talking to Marty Walsh, John Ferrer was talking to Marty Walsh at the top of the hour, and he was raising the question about whether or not the low vaccination rates for minority means effectively they're going to be excluded from work, which is a huge issue for this administration.
Yeah, unbelievable, sort of that type of, if you will, segregation, for lack of a better word, that you might be seeing despite sort of efforts to talk about this equal recovery, Guy, as we have done so much on this program. I think that United vaccine story was also really interesting as well. I know on the close yesterday we had multiple CEOs on the program. As of yet, no one fully mandating vaccines. Edgewell Personal Care was one, of course, whom we had on the show, and sort of hinting at wanting to encourage employees, but stopping short of that fully mandated thing as well. But certainly within the airlines, Guy, given the exposure that they have to some of the travel industry, of course, as we know, we are seeing this week, indeed, a huge increase in sort of those mandated vaccinations.
Absolutely. I guess you're also trying to, as you're hinting at, you're trying to protect the flying public. You want to make sure that your staff are vaccinated and therefore that they can continue to fly safely. Though the CDC reports on the fact that vaccinated people can also transmit the virus may be a factor here, and maybe that takes us back towards this idea that we are going to be wearing masks maybe for a little bit longer. But a number of firms already starting to stipulate this. Certainly the Wall Street firms are mandating that people do have vaccinations before they're allowed back in the building. But even they are starting now to suggest maybe that they are going to push back the time at which they're going to bring staff back in fully. Wells Fargo's been talking about that. We'll wait and see what Goldman Sachs say. We'll wait and see what JP Morgan says. But BlackRock doing it as well yesterday. So certainly Wall Street is taking that attitude. You want to come to work, you need to be vaccinated.
I will say the Expedia CEO, Guy, did a really good job of laying out that, look, this is something that we might have to be living with. We live with the flu every year. How do we live with this, learn this isn't just going to magically disappear next year? This could take decades, right? And so how do we start to return to normal, whether it be masks, like you said, but learning to live with it, in his words, I think really well said, as we think about, well, this labor economy. And of course, these markets, Guy, because it was unbelievable yesterday at the close. We're hitting some record highs. We're further seeing that today. But it is a rate of change, Guy, on these nominal yields, and the real yields certainly catches my attention. Let's not forget, we were down to a 112 on the 10-year. We're back up to a 129. That real yield, Guy, we were at negative 120, also record low, a negative 106 now. It is a rate of change kind of day.
Yeah, but with that payroll number, that incredibly strong payroll number, you've got to start to ask questions about when the Fed is going to be starting to make its move. We are waiting for the president. He is going to be speaking shortly. We're also going to be counting you down to the European close. That's coming up as well. Jeff Yu, Bank of New York Mellon, senior EMEA market strategist, going to be talking to us about his perceptions of the US labor market. What does it mean for the world? What does it mean for other central banks as well? We will bring you the president as soon as he starts to speak. You are looking at a live shot from the East Room at the White House. An incredibly positive payroll report today out of the United States. Is it a game-changing payroll report? This is Bloomberg.